All right. I believe we are live after some technical difficulties, but we are about 7 minutes late here. This is the Investing Power Hour number 53. We're into the second year now, which is, I guess, pretty easy to believe. It's not hard to believe. It seems like we've done one of these each week. It hasn't really flown by because they're very fun to do. But my name is Brett Schafer, and I'm joined by my co-host, Ryan Henderson. It is 12:30 p.m. Eastern time, and that means we are live on YouTube for the Chit Chat Money Investing Power Hour. On these episodes, we cover all sorts of investing, business, and finance topics with no set script. Sometimes we have guests when we can get them, but usually it is just us two. Ryan, how you feeling today? Technical difficulties, but I think they were pretty easy to solve.
Yeah, technical difficulties are always a little frustrating. We're migrating out of our office, so it's been a little precarious sound wise. I keep moving around. People might keep seeing different backgrounds. I'm gonna try to figure out one stationary place to be, but we will see. But yeah, there is some interesting topics this week. A lot of annual letters came out, so I'm kind of looking forward to digging into those.
Yeah, it
Um,
seems like you have what? You have Colombia as an investing pond. We might save that for later, as that's not as the most enticing topic. That is very interesting, but I don't know if that'll tie people in. You have the Jamie Dimon annual letter, which I think will be exciting. And then I have Stripes annual letter. And what else did I have? Why didn't I? Oh, Costco's March update. I thought was extremely interesting. Then we also have potentially Substack launching a new feature, Chamath's annual letter. Maybe we don't hit that, don't say nice things in public, but I did have a few tweets on that. Chipotle suing Sweet Green, and potentially some succession talk. It's going to be all over the place this week. But before we get into the episode, I want to talk about our presenting sponsor, Stratosphere. Actually, let Ryan share the screen here first, so Ryan can hop it up.
one sec.
Yeah. Ryan's going to pull the platform, but either way, let me get through this. Today's episode is presented by Stratosphere, our investing home screen for fundamental research. Stratosphere's dashboard tools let us easily track our investments in stocks we are researching with a nifty newsfeed, SEC file aggregation, and a fundamental charting tool that can help you visualize all the different KPIs you want to look at for a company. We use it every day. And I'm not joking when I say we use it every day. That's our watch list or company tracker right there. You can have a really nice looking, watch list with all the different things you're tracking. So of course, you're going to have the daily change in a stock price on there. And then you can also have annual reports, as Ryan's looking at, transcripts, press releases, basically everything you would want as a fundamental investor aggregated into one home screen. That's not going to be buggy like some of the older places like Yahoo Finance that just feel clunky, old, clickbaity. And if you want to upgrade to some of their paid plans, which give you vastly older historical financials, like Ryan is looking at right now, or some of their KPI data that you can't find anywhere else, go ahead and use our code CCM and get 10 or 15% off, any paid plan. The link is in the show notes. Tell them that we sent you. All right, Ryan, we're going to be using some Stratosphere charts throughout the episode. I have some ones loaded up on Adyen to compare them to Stripe, because I think those are two interesting competitors that are becoming huge parts of the global economy. But first, why don't we start with the JP Morgan annual letter, because it seems like you have some interesting notes there.
I'm gonna audible because it was kind of a mixed letter. I don't know. It's not that.
You
It's
think
not that
Colombia is
exciting.
more fun? Colombia?
Yeah, I mean, people have asked us to do a show on it, so
Oh,
I'll go
what?
ahead.
Yeah, one person, Philip Weather die. I guess it'll be fun. It'll be fun. I think it's interesting. Maybe I'm thinking it's too niche, but I'm interested in it, so I think maybe we should use that as our cue. If we're both interested in it, I think listeners will be as well.
Yeah, I mean, did you read the J.P. Morgan or the Jamie Dimon letter?
I didn't know. I mean, those are too long. I frankly don't care.
Yeah, That's why I kind of partially want to avoid it. It's a lot about banking regulations, which probably isn't that exciting for listeners. But Colombia, we had Ian Bezic. We talked to Ian Bezic last week, for a show that will come out next week. I guess if you're listening to this, it'll come out 4 days after this show is released, on a Mexican company franchisor of number of different quick service restaurant concepts. But it's a little teaser there. But after the discussion, we were kind of talking about, like what's something you've looked at recently? What are you interested in? And he kept mentioning Colombia, basically Colombian equities across the board, because there's so much going on there. And a lot of people, I mean, I personally didn't really know that much about it, but I read up on his Substack and he's got a lot of good coverage there. And basically what's gone on is equities have taken like basically an all-time dive. Colombian equities all across the board. And in August, Gustavo Petro took office. He's apparently considered the first ever left-wing Colombian president. So I guess the concern, or what people are worried about, is that there's a lot of headlines saying that like they're moving towards nationalism, or like, even some of the more
Classic South America kind of conflicts within the political realm that seem, happen frequently in a lot of these countries.
Yeah, I'd say some of the more sensational headlines said they're moving towards like communism and stuff like that. And we talked to Ian, who lives in Colombia, and he basically, he's like, yeah, that's just it isn't happening. But you see all the headlines from people outside the country, kind of having an impact on the equities there. And so, since over the last 12 months, the Colombia ETF and I'm blanking on the specific one. It's like an MSCI Colombia ETF, is down 43%. The Colombian peso has depreciated 20% versus the US dollar. I believe either BlackRock or Blackstone is shuttering one of their Colombian investment vehicles. Yeah, you can see there. I've got a number of, it's MX. I'm blanking on the ticker, but it's the global MSCI Colombia ETF.
Search it, you'll find it. Yeah, if anyone's interested.
And the market cap as a percentage of GDP, which is sometimes, Buffett's used the indicator in the past before as kind of a way, a proxy for investor sentiment in a certain market relative to their actual influence in the global economy, is at 21%. For reference, the US market cap as a percentage of GDP is at 175%. Colombia, out of the ones listed here, is the lowest by far. The second lowest are Mexico and Peru. They're both tied at 32%. So all this to say that the investor sentiment has just gone out the door for Colombia. And there has been some comments made by the new president that seem sort of targeted towards maybe not being a lucrative environment for investors. So there is warranted concern. But here's another tweet that says, according to BCA, not only is Colombia 2 standard deviations cheap, which is, I'm not a standard deviations person. I don't really care about that, but it is 2 standard deviations cheap relative to emerging markets, and the Colombian peso is 2 standard deviations cheap as well. EC, which I'm guessing is the oil play in Colombia, could be wrong there.
Yeah, I think that was,
yeah,
that's the state-owned one. Yeah,
has the 25% dividend yield.
Yeah, well, state-run oil companies, yeah, not surprising to see it, but that is quite high.
Yeah,
and then you talked about the peso as well. It's appreciating. I think we got Ian in the comments here saying it's GXG is the Colombia ETF. So anyone listening, yeah,
it's just kind of like, it feels like you get one of these runs every once in a while where the headlines say you've got a country moving to communism or something like that, and you get this huge undervaluation essentially across equities in that entire market. And any sort of continuation of a normal operating environment would just be huge for returns. I guess my question to you is, do you think that market cap as a percentage of GDP is actually a relevant metric to look at?
More or less. I think it can be somewhat helpful, but it's not the end all be all, because when you look at the United States ones, a lot of the companies within the United States are globally, they get a lot of their revenue from outside of the United States. So I think you should, for that one, it might not be apples to apples, but I think for a lot of these markets can be somewhat helpful. Yeah. I mean, if you compare them to the other ones, Colombia, it might indicate that there's undervaluation there, but in reality, I would much rather just look at the earnings multiples of a lot of these companies. And when you're maybe looking at some of the energy ones, you want to take maybe a 10-year average, or, don't just look at 1 year, because we've had some high oil prices and obviously that stuff can be volatile, but it can be helpful, I think, but it's not the first thing I'm looking at. And then the other thing I like somewhat about the South American ones is I think people overrate or get way too scared about the currency devaluation. I know sometimes that can totally ruin you, but I think people take that risk a little bit too far, and that can present some good risk reward scenarios. Obviously, Colombian stocks, especially with these foreign exchange risk, especially with the risk that some of these countries have gone through, terrible downturns. Look at Venezuela, look at Argentina. There's that risk there, but sometimes things are so cheap. I do like Mexico a little bit better because of its ties to the US, and where the United States might say, look, we're never going to let Mexico's too important of a trade partner. We're never going to let them go down that path seriously, or they would somewhat stop them. But I like the South American companies, and basically the North and South American, or excuse me, countries, the North and South American countries better, because the US has a more dominant influence in this region compared to maybe the risk of communism in an African country, an Asian country, something like that. What are your thoughts?
No, I think I agree that it seems like there's maybe more upside in Mexico,
With less
just
risk, I think.
just because of all the reshoring and going on too. But when like the currency stuff, I'm looking at the chart right now. From 2003 to 2013, the Colombian peso appreciated a lot against the dollar.
Yeah,
Now,
so I think people kind of they just look at glass half empty too much with the currencies.
yeah, I mean, and it's come down a lot over the last 10 years, but it feels like and the US dollar has been an outlier, but it's never as good or bad as it seems, like unless the country's like literally, going out of existence.
Pulling Venezuela, yeah.
Yeah, usually the currencies kind of bounce back a bit. It feels like maybe that's what's going on with the Colombian peso, but obviously not a huge currency exchange person. The other thing that I'm kind of thinking about here, well, I guess
what solves that though
where
is dividend yields. I don't
was
know if you're going to say, yeah.
Yeah, I was about to say that, where if you can get a company, let's say if you're an American investor like us, and you're fishing in the pond of Colombian equities, getting that recurring dividend, whether that's quarterly or biannually or something like that, it gives you in some ways a little bit of less risk, because you can just convert it back to the US dollar and invest it in something else. You could reinvest it too, but then you're still kind of potentially having that same risk still. So the dividend helps alleviate some of those concerns. And right now, you look at some of the big dominant kind of Colombian businesses, some of the larger ones, they all pay steep dividends because the multiples on the businesses have come in so much. So there is
it's interesting. It's interesting for sure. It's really
what do you think of that approach of looking at countries as kind of sentiment around countries as a pond to fish in?
Yeah, I think it can be interesting. I would never want to have too much exposure to one country that I think there are political risks or currency risks like Colombia that are a little bit unquantifiable or they add a lot of uncertainty. But I don't. I mean, I do. I think it can be really great, risk reward opportunity to take maybe one stock you like a lot, take maybe a 3 to 4% position in your portfolio, or maybe even smaller. And it can be, I think, or even if you want to just take a starter position, it can be really interesting to, as a learning experience, you track the company, learn about this international market. But yeah, I do like looking at these South American and Central American. I like Mexico a little bit more, but you get maybe some potentially bigger discounts in Colombia right now.
Here's what
Yep.
Ian's in the
Yeah,
comments again. He says, British pounds per Colombian peso in 2003 was 5,000. 2023, it was 5,700, basically flat over 20 years. No one would say Britain is untouchable due to FX, yet, as you say, far higher yields in Colombia. Yeah, I mean, I think a lot of the times the currency risk is kind of overstated when people evaluate some of these emerging markets.
Because we have a lot. I mean, it seems like every market except for the United States and I guess Mexico now, Mexico and Canada, especially Europe, is almost a demerging market or a re-emerging market. It's turning it back into an emerging market ever so slowly, especially with all the stuff that's happening. Although maybe I've been reading too many tweets from Doomberg, and that didn't materialize as much as people are saying this winter.
And if you look at like the funny thing was FX was such a huge over the last year, but if you look at it over the last, I want to say 6 months, it's come down substantially, US dollar against a lot of different currencies, and so maybe you get a little bit of a tailwind potentially for some of those businesses that are earning globally, but domiciled here in the US. So I don't know. Yeah. I think because it was kind of there's puts and takes, because if you look at it like, if you look at the earnings this year and you exclude foreign exchange, like if you just look at everything and you're like, well, on a constant currency basis, yada, 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 you can't really do that because those are like real material change, like impacts. But at the same time,
it's still useful to look at.
It's a useful indicator for what the underlying business is actually like, the demand for the underlying business, because you don't know what that's probably not going to continue, at least what the US dollar has done against all other currencies for the next 5 years. That seems unlikely.
Yeah, and I think that had a huge impact on profit margins for US companies. I mean, look at all the largest companies in the S&P 500. You got FANG or whatever, FANMAG, whatever you want to call them, the big five. You have NVIDIA, you got Visa, MasterCard, you got the big CPG giants or healthcare giants like Johnson & Johnson, Procter & Gamble. You get the other CPG giants like Pepsi and Coke. The list goes on and on and on. Tesla, some of the automakers, I guess except, I don't know. It's more of an import, I guess, in that regard. But I think the point stands. When the US dollar appreciated that quickly, I think that had a huge impact on profit margins. And going back from, not really, we're, I guess, away from Colombia at this point, but in general, I think with the US companies, it will be interesting if, people have been talking about how profit margins in the S&P 500 have just tanked in recent quarters. It'll be interesting if the US dollar depreciates a bit here, how much that will benefit that, or if it really wasn't that big of a deal. Yeah. And then there's all this talk that I don't really understand about Brazil trying to buy something from China and, evading the US dollar, and China going to Saudi Arabia. But I think as long as, all the classic, I guess they're not all charlatans, but all the classic doomers in the financial media are talking about the collapse of the US dollar. So that's kind of an indicator to me that it's probably a bunch of nonsense. That's interesting to follow.
Yeah, I agree. The other thing, there's an investor known as Peter Kundill, who ran a value fund in Canada and really outperformed for a long time.
Is this your newest book report? Because you did say you're going to do bi-weekly book reports. Did you forget to do it? Is this what you just read?
I have read a couple more books, but no, this was from like a year and a half ago. I read his
Mm.
book, but it
Did
was
you
in
read the Did you read that Messi Ronaldo book that I sent you, or no?
no, I did not.
Uh,
I I read Chip War, which honestly I thought was kind of a slog, but um, and maybe it's just not my realm of interest, but
yeah, you don't like you're not a Department of Defense history guy. That's right.
not particularly no. But the part of his strategy was like finding where finding geographies where it was like investor sentiment was just so poor and people were saying like, this country's gonna fold or whatever. And even though there is obviously higher risk associated with those, because maybe some of the sensational headlines are maybe there's some truth to them, the return or the upside potential was so worth it for a lot of these companies that it, if he got like the dividend plus oftentimes a little bit of multiple re-rating, he would get such good returns, even though, he doesn't know the market that well, or he doesn't, even if it's like a business that's like not perfectly inside a circle of competence, it's things no one else would touch. And so I just find that an interesting approach. It might be too risky feeling sometimes for my own liking, but it was an outperformance strategy for him.
Yeah, I think it's interesting because say you make 10 of these bets over a 15-year period, or you target 10 of these countries, or you find 10 of these sort of geographical situations over a 15-year period, maybe two of them turn out poorly, but the 8 of them that work are going to have, it's going to for sure lead to good returns, because
It's,
sometimes that's why you don't bet, your entire portfolio on the Colombian market unless you're someone like Druckenmiller or something like that. But
and
yeah.
you can make the case that it's kind of what it's kind of like Buffett's investment in PetroChina, where
It's not. Yeah, it's a good comparison. Yeah,
like obviously I don't think he loves the Chinese market, maybe not as much as partner, but
yeah. Munger had some biased him a bit. Maybe has biased him. I don't know.
I mean he saw the upside, and I'm not sure if it was all purely from dividends. I think he was getting like an insane dividend on there, but
And like 3 times earnings at the start, something like that. Yeah.
yeah, like any level of multiple re-rating, you're in the clear as an investor. That's
Yeah.
attractive, even though maybe it's not as fun. Maybe you don't like love the operating environment. Maybe you don't like feel like you're a part of a team, where like I think a lot of shareholders for like US companies, let's say you own Tesla, it's kind of a primary example. You feel like you're a part of a team. Um,
Yeah, that's dangerous,
I know
but
I
it
want
can
to
be fun.
feel like that with some of these emerging market companies that I have like no affiliation with, but that's I feel like it could be a winning strategy.
Yeah, obviously not investing advice. We haven't done any investing here. It's just kind of something we're exploring here. But it seems like, and again, I don't know that Petro China situation the exact same, but it seems like it could be a similar situation than that Colombia um, state oil company, and then the Brazil one, Petrobras, whatever. You'll be able to find it if you look it up for any listener. It, I believe, has a 25% dividend yield as well. So those could be similar situations where, you got a state-run oil company in a kind of a potentially communist or politically uncertain area, but it's an energy company during an energy shortage, and they're going to pay you all your cash back within a couple of years.
Yeah.
So it's
I might,
interesting. It's the risk rewards there are interesting.
what would you feel more like inclined to swim towards if you're investing in those markets, would you want the stuff where, Bank of Colombia is like one where it's less um
It's not state
uh,
owned.
it's not state owned, but it's also not as cyclical as the oil business down there.
Yeah.
But you get a much higher yield with the more cyclical company. Would you find yourself going more towards the cyclicals that are just dirt cheap, or the ones where they're probably going to be around as long as the country's still around, or going to be
Mm,
earning as much potentially?
I think it all depends on price. It all depends on price because we like some of those, when we delve into the deep value micro cap or whatever, we really like stuff that may not be a good business, but trades at like 1 or 2 times earnings. That's the stuff that we're really looking at. And so I think with the cyclicals, I'd really want it to be extremely cheap, but for the other ones, possibly different. Hard to tell though. I'm nowhere near the level of having any sort of intelligent thought on the topics, except for the overview stuff that we kind of read from some of Ian's work. But other topic, Ryan, do you want to skip? I mean, we got plenty of stuff this week. So do you want to skip the Jamie Dimon letter, go straight to the Stripe annual letter? Because I think that'll be an interesting one.
Sure. Maybe if we're not going to talk about it, I'll just maybe mention that it's the second half is worth a read, because he gives kind of his thoughts on just the current environment, as opposed to like just, I mean, unless you're a JP Morgan shareholder, I don't think the first half is that necessary, because he talks a lot about just like the company's approach and everything. But it kind of solidifies my belief that I'm a full blown Jamie Dimon fanboy, I think, at this point.
Really?
He does a great job. Okay, I'll take one example.
Yeah, I mean, they are the leader. They've extended their lead.
Let me find the example that he that I think is exemplifies kind of who he is. So he's talking about ways to like create actual franchise value. I'll talk one quote and then we can move to the Stripe annual letter, because it might bore people. He says, if you buy or create a loan at par and put it on your balance sheet at par, think of a mortgage, and internally finance it, even match funded with 10% capital, you might believe you have a 12% return. Many companies subscribe to this interpretation and simply continue to borrow money to invest in such a thing. But I would tell you this product has no franchise value, because it is only worth par. And in fact, a small change in that value, because of interest rates and credit spread, could mean that you have made a huge mistake. If, on the other hand, you create a loan and sell it at more than par at a profit, you've created value, whether or not you keep it on your balance sheet. And far more important, if you create a loan and at the same time forge a client relationship and you add additional capital light revenue, such as asset management, cash management, you have created something of long-term value that you can nurture and grow. This is franchise value. Simply taking interest rate risk, which contributed to the downfall of Silicon Valley Bank, is not a business, nor is simply taking credit risk. One person and a computer will suffice. You do not need 290,000 people circling the globe to do that. I think it's a good approach of managing the overall business. I think it's a good quote as well, but
yeah, I don't know. When I read about banks, I don't know. I know some of them can turn into great stocks, but I just fall right asleep when I start reading about banks. It's so boring. It's so boring to me. I don't know why. It's just I can't get myself to get excited about it. I think that is important. It's, there might be so many opportunities within the financial realm, but sometimes I just struggle to get excited about it.
Yeah, but it is like always so at risk. And so, I mean, he talks about this too, but it's so built on trust that like anything happens that loses that trust, your whole worth or your whole ownership might not be worth much. But if they pay you out along the way, potentially it's there. The other thing is like the regulatory, he talked about this. They're like, whenever something bad happens, regulators' kind of instinct is to add more like stringent capital requirements. That's usually not good for shareholders of the bank. And coming out of this Silicon Valley Bank crisis, there's probably a good chance that happens if it hasn't already. So
for all the banks, for all of them,
yeah,
or maybe just the regionals,
or at least the large ones, like higher capital requirements. I think there was something about new Basel. They've always got those.
I think it's Basel. It's Basel because it's Swiss. I think it's Basel. Yeah, I always hear about the Basel Accords, but I have no idea what the hell those mean. But let's go to the Stripe letter. So this is about 10 pages. Pretty, I'd say it's a pretty easy read. I'd recommend it for anyone interested in the payments or startup or e-commerce realm, I guess. But I don't have really any major quotes. I think the main takeaways I have 5 bullet points. 1, they processed $817 billion in payments last year. That grew 26% year over year. That was a significant slowdown from during the pandemic when they're growing at 60% rates. However, they didn't kind of contract. So we're still seeing them gain market share within all sorts of payments around the world because obviously, the global economy wasn't growing at 26% year over year, even with inflation. They talk significantly about, I think I want to talk about this in conjunction with them and Stripe, them and Adyen, about authorization rates and the huge improvement that is still left with that. They also, and this might be a red flag because the management team loves to hop on the newest trends, but I think that is also to part of their brand to kind of get startups to like them, is they talked about the growth in AI startups and all the usernames and websites and stuff like that are using .ai and things of that nature. And they also mentioned, maybe I'll share this chart because this one is interesting. I think maybe this can be a good one that we can hit, specifically comparing the two payments ones. Yeah, this will be fun. So they talk about startups getting democratized outside of the West Coast of the United States. And if we look at this chart, it's loading. We have Bay Area growth in kind of, they define like breakout startups, I think, as just successful ones. The Bay Area was growing, but there are other areas, specifically Miami, Paris is growing well, Toronto and Tokyo, that are growing much faster. So I think that's quite interesting that the startup realm, and maybe San Francisco and Seattle aren't doing themselves the best favors. The local governments are not doing themselves the best favors. And what we just saw, I mean, that's not a laughing matter. That old Cash App creator got murdered on the street. I mean, can't really make excuses for that. But it's interesting, I think, that it's getting more democratized to the East Coast, and then also Europe, Toronto, Tokyo. Any thoughts on that, Ryan, I guess, before we move on to the second part?
Well, I feel like we've heard a lot about startups
Anecdotes,
moving out of San Francisco. And I mean, we have friends or people we know that live in San Francisco, and oftentimes they say, it's not as bad as people make it out to be. But I do think the sentiment around it of, like, I guess, safeness and this story of the Cash App founder probably doesn't help. Discourages a lot of people from starting there. So I know I was surprised by that the Bay Area stat there still held up so well relative to a lot of others. I mean, it probably
I don't think
helps.
it's not a negative for the Bay Area because it still is significantly larger than when it had pure dominance in 2016, 2017. Well, I guess Seattle, New York, Boston still had some, but yeah.
Yeah, I mean, I think having so many venture capitalists there probably helps.
Mm-hmm.
But it is interesting. Anything else from the Stripe annual letter that you thought was fascinating?
They talked about the authorization rates being so important, and they kind of had a few paragraphs on that, which I don't need to, I guess, read off all of them. But I think that is the key reason why them and Adyen are gaining market share within all these small businesses, internet companies, enterprises. And for reference, Adyen is someone similar to Stripe, where they are the back end, and they're not the exact same company, but they run the back end for a lot of these, say, I don't know, omni-channel companies. For example, Stripe has a partnership with Amazon to run some of their back end of their payments. Adyen has two big customers in Spotify and Uber. Stripe has a customer in DoorDash, companies like that. And then Stripe also caters more to small businesses, which is why they have a few that they're a bit more expensive for them, but we don't need to get into the details. But the reason that they're getting chosen is because they have they're much better at these authorization rates for payment transactions, because, and I guess what the authorization rate is how many times someone tries to make a payment or tries to get to the checkout page and finish the transaction and order something, or even at, an in-person transaction. It is how many are successful that should be successful for a merchant. And to be honest, a lot of the times it's much lower than people think. It could be as low as, for some of these other merchant acquirers, something like 93% or lower. And for Stripe, I believe, I don't have the number in front of me, but they're significantly higher than some of these legacy providers. Adyen is known to have the best authorization rates throughout the industry or around the globe. And you might think, okay, 93% versus like something like 96%. That's not a huge difference. But it's huge for the companies that can change their revenue by, I think Stripe gave an example of a company in the United Kingdom that boosted their revenue by 500 million pounds simply because of this change in authorization rates. And that's just a gigantic difference. And I wonder if this is a long-term competitive advantage for these two companies, or because it takes so much work and so much back end and so much R&D and so much machine learning tools to build out these, to improve this authorization rate and get closer and closer to 100%, and to have it, have your products available throughout the globe. I wonder if this is a long-term competitive advantage and they'll continue to gain market share. Because, for example, Stripe is obviously dominated. Let me share this screen here of a nice chart with Adyen, who's a similar size. It's loading up here. Yeah, Adyen. Again, this is a nice chart in Stratosphere. Go check them out. Their total process volume has grown at a 57% rate since 2015. And over the last 12 months, which is fiscal year 2022, they're at 770, basically called 768 billion in process volume. So just slightly under Stripe, but I think growing a little bit quicker. Yeah, looks like it. I don't know. Any thoughts on this, Ryan? Because I kind of feel, and Stripe may be one of those Silicon Valley companies that spends a bit too much and is really just worried about payment volume growth and writing good blog posts and stuff like that. So regardless of the profitability, that's a whole nother question. Do you think these companies, I feel like it's just not a slam dunk, but pretty easy to see how these companies grow at a double-digit rate for a long time and just eat market share from these legacy providers that just cannot keep up with these authorization rates?
Yeah, I mean, the authorization rates being better is definitely a benefit, but it also, especially when you think about like the startup ecosystem and people establishing like a payments system for the first time, they have such good brand awareness, I think, especially within that
and
cohort.
It's easy to implement too, where you just paste in the code. Yeah, you're right. Yeah.
So I think that's sort of another major help. But I think where the authorization rate is a major differentiator is the ones that are using that already have some sort of payments processor that's like legacy and they're a bigger business, because that's when you can easily quantify the difference in what your revenue would be, or at, let's say, I'm trying to think of a high profile business that's switched recently to Adyen, but they can,
let's just say Subway just switched to them, I believe. Maybe that was a few years ago, but Subway's a good example. They're a customer of Adyen. Yeah.
You can easily look at that and say, okay, here would be my difference in revenue. Whereas if you're a startup, you don't really know what your revenue is going to be. So you're just going to go with the most seamless integration. And
or the one that everyone else is using. Yeah. So I wonder, here's the big question, because Adyen has tried to go for enterprises originally, while Stripe went for startups and grew with them. And some of these startups turned into huge businesses over time, which they've been able to ride. But both companies now are kind of trying to move back into or become full-fledged, Stripe's trying to move into enterprise a bit. Adyen's trying to move into small businesses. Who do you think is going to have an easier time? I think Stripe will, but I don't know if they can do so profitably, because Adyen runs so efficiently that they're able to offer lower rates. And that's why, say, like that Amazon deal that Stripe had, maybe they're going to make some margin, but Amazon signed that because Stripe agreed to sign a long-term deal for Amazon Web Services. So I don't know how profitable that could be for them, because Adyen has shown that the hardest customers, the enterprises, they can be quite profitable with, but Stripe, I don't know, TBD. It'll be really interesting to watch, though.
Yeah, I don't know. It feels to me like it would be more difficult to move up market towards the enterprise, because that away from the processor before. Can you hear me? Sorry.
Yeah, you froze a bit. I don't know. Yeah, you're choppy, but you're back now, I think. I heard
All
something
right.
about moving up to the enterprise is more difficult. Yeah.
Yeah, I'll try to talk slow and cut me off if it's bad. But the yeah, I think the more difficult part would be getting someone to shift a big company to shift away from an existing player because there's probably that process might be fragile, I guess. Like you don't want to have anything offline for a while. Or it might be like sticky. I guess I'm not that familiar with that process, but it sounds more difficult than just starting from square one and having an API that's easy to embed. Um,
Yeah.
but at the same time, get it trying to get to the brand awareness level that Stripe has got to be extremely difficult. Um, and that's a lot harder to cultivate. Even though Adyen probably has it, at least in Europe, I don't know if they'll ever have that sort of brand relevance with the Bay Area or startup ecosystem in the US that Stripe has.
Yeah. I agree. I agree. And Adyen, yeah,
Great.
is a European company. So the, hmm, yeah, TBD. I think the big, I don't know, again, Stripe from some of the stories that have been written about them because they're not a public company yet. It has been noted that they might not be as frugal as some people might like, but I would definitely bet that 10 years from now, both these companies are processing $5 trillion in annual payments and then saying not. I would, if I had to choose, I would bet that they both would be.
Did the
Or close to that.
26% growth surprise you?
No, I think that's about down the middle of what I would think because if you look at their customer bases, they're still growing, even though they saw an e-commerce slowdown. I think, yeah, like maybe it's a little higher than I thought or expected, just given the slowdown. But no, it's about right in line.
It is crazy to me that that level of a slowdown has such an impact on profitability, I guess. And we don't know their exact profits, but we knew if I'm not mistaken, they had to do a number of layoffs.
I think they were planning for a lot higher growth starting this year. Yeah. So they had to invest in front of that. Although Adyen has been able to scale, maybe it's because it's enterprise, but I don't know why Stripe needs to invest in front of it when it's just a lot of it's not like your customer scale with you and stuff like that. I don't understand, but whatever.
Yeah, isn't there the story that like the business was started with a single line of code or 7 lines of code or something like that? And that's how
Yeah.
easy it was to just like embed for customers.
Well, no, I think you're so the
Or all
customers
the
have the
API was
customers.
7 lines.
Yeah, the customers only have to embed 7 lines of code or whatever it is, 10. But there's millions and millions and millions underlying that, and that's why their authorization rates are so higher. But I think they're both going to have because, and maybe any listener correct me if I'm wrong. I don't think Stripe acquires companies either. So you have Stripe and Adyen that have both built their own systems clean from scratch with modern technologies, the best engineers, and then all the legacy players they're going after are, inside of banks and built on this just antiquated stuff and duct taped together. And it just feels impossible for these other legacy providers to catch up. And then eventually, you talked about the stickiness of some of these products. I think it's a little bit of a weaker competitive advantage than people think because you could onboard, say, Adyen in a certain geography for some of the payments can get processed and kind of doing a test run, and then you can slowly grow with them over time. That's why they get the majority of their revenue growth from existing customers because they expand their merchant acquiring usage across them because they have better authorization rates. So like you don't have to lock in with a single payment acquirer. And I think people were actually concerned when Shopify basically said that they only use Stripe at one point. I think they may have multiple merchant acquirers now because they usually test out some for better authorization rates, better payments and stuff like that. But yeah. All right. You want to talk about Costco? I think that'll be fun.
Sure. Well, maybe I'll
Okay.
throw out some of these random ones. Chipotle is suing Sweetgreen. Thoughts?
Yeah. I wonder what the Sweet Green people did to them because people use the Chipotle term all the time. So I wonder what Sweet Green, do they feel threatened by Sweet Green or do they just have some random beef with them?
Yeah, I'm not sure. It is kind of an interesting thing. Yeah, so just for context, I believe they sued them over the use of Chipotle chicken as like branding over one of their chicken products.
It was like a bowl, right? Yeah.
Yeah. But people say that people call stuff Chipotle chicken all the time, like tons of restaurants I can think of. Maybe they do have a specific beef with Sweetgreen just because I think Sweetgreen, I don't know if they've cultivated this brand on purpose, but I think it's largely known as like the Chipotle, but for salads.
Sort of. Yeah. Yeah. More
So
expensive. More expensive, that's for sure.
perhaps it's some more
I don't know
competitive
why.
concern.
I personally know this about investing at all. I do not know why anyone would go to Sweetgreen because those are it's how long does it take to make one of those things at home? Like 5 minutes? Just chop it up, put it in a bowl. And it costs like $3 from the store, but whatever. I guess if
I
the
mean, you could
company's
say the
carrying,
same stuff for Chipotle.
yeah, but that'll take a little bit longer to make. A little
People,
bit. The ingredient,
yeah.
yeah.
I mean, it's not usually like straight. Like a lot of people will put, uh, chicken and stuff in their salads, which I imagine takes about as
I guess.
long.
Yeah. Yeah. I just have I don't know.
People like it. I mean, it's
I
remember we have a
guess.
bad gauge on consumers.
Yeah, I just they don't the store the concept makes zero sense to me. But let's talk about Costco. I think really interesting. People are calling this the canary in the coal mine, so we'll see. But it's just one data point. So they do their they update their sales every month, and they released their March 1 yesterday as of the time of this recording. And they said for the 31 weeks ending April 2nd, the company reported net sales of $138 billion, an increase of 6% from $130 billion from the year prior. However, for the 5 weeks in March, so I think the trailing 5 weeks for the date of April 2nd, so 5 weeks trailing April 2nd, in the US, comparable sales were down 1.5%. In Canada, they were down 2.5%. And in international, they were only up 2%. So the total company comp sales were minus 1%. And e-commerce
Does that exclude
was,
gas?
I'm guessing.
Because they usually report it as two different things.
Oh,
Like,
they have the one excluding gas. US was 0.9, up 0.9. So still big slowdown from the other one. Yeah, no, that's good. Good catch. Yeah, wanted to say that, but still, giant slowdown. And e-commerce totally took a hit, negative 13% for them. What do you think about that? Because from my seat, it feels like that's a good data point that inflation might be down, and that the consumer is normalizing and not spending an absurd amount. And then we've kind of got through this excess savings.
yeah, and I mean I think it's important to look at it with the excluding gas because gas prices can change and it's not really up to Costco. But
Right. So they were all up with gas, just for any listeners that are confused. In the US for the 5 weeks ending in March, it was up 0.9%. But in the 31 weeks, it was actually at 5.5%, excluding gas. So big slowdown in March still.
yeah, it is kind of interesting. I do think it's a fairly good barometer for inflation in the US, or consumer sentiment in the US, consumer spending, because Costco is such a big chunk of a lot of households' spending. I guess maybe that has to do with. I mean, it's a bummer because they don't break out like what is them taking price versus what is volume. But yeah, I think we were
Well,
expecting.
generally they run pretty break even, right? And it's all membership fees. So who knows? I don't know.
Yeah, I mean, there's still the comp sales will still usually be up just because.
Well, yeah, sales, but I'm saying the
price.
margin. They say like when they're growing comp sales, it's because of they're not taking margin. Typically, it's because their costs are going right, and more people are spending. It's like they're not
Right,
trying to take they're not trying to take profits on the product sales.
Yeah, I'm more trying to decipher what is them raising prices versus what is
Oh,
more
yeah.
people coming through, like more tickets. But I guess I don't think they really disclosed that. I don't know. I mean, it felt like we were going to see a consumer spending slowdown for a long time. I'm honestly surprised that we're still getting positive comp sales, but I guess with all the price increases, that means that has to be probably a big slowdown in average, or not average ticket, but the number of tickets or people coming through. So
Yeah.
I don't know. I guess I don't have any hot takes on it.
Yeah. It seems, I think it's a little bit worrisome for some of these companies, but I'll also be interested to see how Amazon fares and whether they are actually gaining a lot of share here. I think they're definitely getting share in e-commerce. Costco's not really a competitor here, but yeah, I'll be really interested to read the Amazon numbers compared to this. I also think, to bring it back to the housing that we always talk about, that the more people that lock in 50% of their income into their mortgage payment, which each month more people are doing it, each month more families are locking in 50% of their income into mortgage payments, the worse that this headwind is going to get. It can only get worse. I mean, that effect can only get worse unless something changes with the housing market.
Yeah, I mean, affordability for homes is obviously not as good as it was a couple of years ago. I'm trying to see what's that site? Fred
Yeah,
housing
Fred.
prices, housing index. I'm looking at it
Oh
to
yeah,
see if it's come down at
price
all.
are still no year over year. I think they went up. I think they're up. I think that one's lagging too. There's some forward ones that February like prices went up. So
All transaction house price for the United States, 1 year, it's up.
yeah,
Yeah, that is
the
shocking.
yeah. I mean, on a real basis, down, but yeah, the affordability on that. Yeah.
It's
So
gonna
I
be, I
still think
mean,
it's got to be a headwind for some of these companies. Like you're not gonna buy that extra thing at Costco, or you're gonna lose some members, or someone's not gonna buy that extra thing on Amazon. It has to impact. What do you go from 30% of the income to 50%? It has to impact it. Just there's no other way around it. And it's incremental. Yes, not everyone, but I think it has to have an effect. I mean, there's how does it not?
yeah, is there a savings rate?
Like, is there income that is magically going to show up that I'm not aware of, or are we gonna just run credit cards forever?
Wage inflation.
True. Yeah, maybe more in
Personal savings rate over the last year, it's back to where it was.
Yeah, I saw it's kind of normal, right? Or no, or is it super low?
4.6%. Yeah.
Pretty normal, you know.
It's up
Yeah,
relative to the same time, 2022. Yeah. But I, yeah, the more I study this stuff or research it, the less I feel like I know, because I've been a believer that home prices have to come down for a long time, or at least for the last since mortgages have gone up. But personal savings rate is back to where it was last year, and home prices are up. So
yeah. I mean, there's so many variables, but I guess home prices don't have to come down, but the money the money has to, like, the flows go somewhere, and there's less flows for other things if people are spending more on housing. All right, we got a few minutes left since we started late, probably for one more topic. What do you got, Ryan?
let's talk Substack is creating short form posts, maybe trying to become a little bit of a Twitter, and maybe more broadly, for anyone that uses Twitter, they added a dog logo.
Yeah, what a product team.
It just,
The Doge
yeah,
logo. It was supposed to be an April Fool's joke. They couldn't get out in time. About 3 days late. Now they seem to can't get it out.
yeah. Something I do find interesting
Oh
is
god,
like,
so bad.
does if Musk owns Doge coin or whatever, does that, like, is that securities manipulation?
Yeah, or if you're on that product team and you buy Doge
Yeah, I don't
because it
know.
went up what
That's kind of
30%, it's shady. It's unethical.
that's never stopped him. The but yeah, I don't know that. I used to hate when people would say like, um, Twitter's going downhill. yada yada yada. But I think over the last week I've kind of had a bad experience on there. But like my
Yes.
tweets are no longer like relevant. Like the stuff I see is all like politically controversial and stuff I don't want to see
Yeah.
when I'm just looking for like.
I only do chronological. Can't do that for you bullshit.
I know,
It's
I don't want to
useless.
see. And I
I'm
always get Musk's tweets on the For You. I'm like, okay,
I'm team chronological.
yeah, I think you gotta be. Other thing, a certain VC wrote a letter, and
Uh,
referenced the man in the arena quotes.
yeah.
It's pretty inferior. Like that to me is probably one of the most like, come on, we are not any,
Warriors.
we're no men in any arena. Like,
Yeah, you're not
just
gladiator.
allocating. I think it's very important as capital allocators to understand your role in society. We are not creating anything.
They're the people sitting in the stands while the gladiators fight.
Literally, that's
Yeah.
exactly what you are. Like you are the opposite of the man in the arena.
Yeah. So I
Same
mean
for
that's
us.
all.
Buying
Yeah.
stocks is not. We're not in some arena.
Yeah. It's just pressing a button. Yeah. The yeah, I mean that's always a red flag if I see someone quoting that in finance. The yeah, I mean, I don't think there's much to say on that letter. It's just kind of a joke. Um, but no one should have imposter syndrome because this person improvised their way to people for about 3 months thinking they were the next Buffett. But I want to talk about the Substack creating this Twitter-esque product. What do you think? Disruptive or no? Well, we'll see. I guess it hasn't actually rolled out to users yet, but what do you think on the potential of Substack becoming an app website that people use for the short form plus having this email newsletter stuff as well?
Yeah, it kind of reminds me, honestly, it feels maybe more similar to like common stock, which we've posted on before, kind of going that direction. Um, I think it could be useful. I mean, right now on Twitter, anytime I see like a long form post, it, it's really not user friendly for someone who doesn't like subscribe because it like just
Yeah.
redirects me to some Safari link, and it's kind of like it's just not really. I just avoid those, so it makes me think like, yeah, if there was a app that was more convenient for those sort of medium form posts where it's like a couple paragraphs, like yeah, I'd love to read that, but I don't know if it's really going to replace Twitter. Every time I see that stuff, first of all, I see it on Twitter and everyone talks about, is this going to replace it? And they talk about it on Twitter. Like, I think Twitter's always going to be, as long as the experience is not just bogged down by, some of the stuff we've talked about, it's always going to be sort of what do they call it? The town square for really short form content. The modern news feed. I don't see that changing.
Yeah, I kind of see your point, but one, Musk is doing his best to destroy it. Two, Substack is huge. There's a huge overlap between the key power users on Twitter and the people that write on Substack across all different domains: sports, investing, politics, other stuff, philosophy. So I think they've already captured a lot of that audience, and if they can convince people to only post on Substack because they have a large enough audience, maybe the people will get attracted to start going there only, because the key is having the big time accounts that post a lot. For remember, it's the biggest one, Elon Musk, to be on Twitter and posting. And if you get a lot of these places, like what's a big Substack that I'm trying to think of? I mean, think of the finance ones that people follow or subscribe to. If they are strictly on Substack and that turns into almost a social network for them as well to share their posts, maybe it replaces it. However, right now, Twitter is such a huge funnel for almost all these Substacks and email newsletters in general that unless that becomes not valuable for these individuals or companies anymore, then they'll probably stick around and be on both. But we'll see. If anything, one can do it, I think it's going to be Substack.
Yeah, I'm rooting for him. I like Substack. I've always been a fan of that platform. Makes it
They
really easy for creators and for readers. We have
they do
like
well. Yeah.
2 or 3 minutes. You want to talk Succession?
Yeah. What do you think? Favorite quote so far? Season's fine. I'm rooting for Roman because he seems the most competent and he seems the most psychologically like, his father. I'm rooting for him because it seems like all the problems he has are clearly because his father treated him like absolute dog shit, and he actually is competent after he's learned a bit. So I'm definitely rooting for him, and of course, Greg to succeed by the end. Those are my two. Those are my two horses.
Yeah, I am. Obviously, you have to root for Greg. Um, I I like Tom, but he gave kind of a measly speech there at the beginning um, of episode 2.
Oh yeah,
And,
he's gonna get
but
pushed out. Yeah, he's definitely gonna get pushed out.
I don't know what you're a Kendall hater.
Yeah, dude, come on, he's a chump. Substack meets Masterclass meets the New Yorker. I mean, he has no idea what he's talking about. He's very dumb. He's like, what if we just do Africa every day? I mean, he's supposed to be the idiot, and Roman's supposed to be the one that actually has business sense. So that's why I'm rooting for him.
He does seem to his intuition seems to take him the wrong way often.
Yeah, although Shiv might be worse, but she's more
Yeah,
confident.
Shiv is more confident. I don't know. I guess it all comes down to cousin Greg.
Yeah,
Something tells me he's not going to end up at the throne.
he's not. Yeah. Who do you think they're basing Madsen off of? I think it's
Musk.
Big Time Musk vibes. Yeah, especially when he was drunk on the couch, calling him up. Like I was like, oh yeah, this is Musk.
Yeah, I like that
This guy's
character. It's
yeah,
a
he's
good
good.
character.
Yeah, definitely a good addition to the show. They're it's very funny this season though. People talk, the only complaints I hear about Succession is that's the same old stuff. And I'm like, yeah, it is, but it's very funny.
Yeah, I don't mind. I like the same time
Yeah,
dynamic every season.
people get all they're like, I need to understand this debt structure in the boardroom deal and whatever the fuck they're doing. And it's like, no, you're not supposed to. They don't give you the details on it, so you're not going to be able to understand it. They're getting a deal together. That's all you need to know. And they either need someone or are going to try to screw someone. That's it.
I know all the analysts of Twitter were like trying to screenshot and hyper analyze the comps for the Gojo Waystar deal. They're
Yeah.
like, oh, what what is it?
I do like
Comparables.
how they're taking the Disney Fox merger to a T, where I mean it's not the same because it's a tech company technically acquiring them, but where they're spinning up ATN, which is Fox News. I do like that aspect. It could be fun because it seems like that's, I don't know, Murdoch, with the Fox News stuff and the spinoff. It'll just be I thought that was just a fascinating way to go about it.
Yeah, I agree.
I think Roman would be very good at running Fox News. Not saying it'd be good for the country, but I'm saying he'd be very good at it. As long as he kept his pants on.
All right. Well, I think that's gonna do it.
Yep, that is gonna do it. All right. Yeah. Let me see what. Oh, check out Stratosphere. Sorry, I had a little bit of brain meltdown there. Use our code CCM, get 50% off. They have great fundamental charting tools like the ones we were using with Adyen this week, and you can try it for free. Download it. Tell them we sent you. Remember, we are not financial advisors. Anything we say on the show is not formal advice or a recommendation. We are general partners at Arch Capital, and clients may hold securities discussed in this podcast. Follow us on Twitter at Chit Chat Money. Subscribe to the free email newsletter to get updates on the show at Substack. Link will be in the show notes, and give us a review on Spotify or Apple Podcasts to support the show. These go live every Thursday, 12:30 Eastern time, right at your lunch hour. Anyone who wants to join us live and ask us questions, please do. Thank you all for watching. We'll see you next week.